Hi everybody, this is Lara at pureelliottwave.com. I'm updating my Riot blockchain analysis, Elliott wave and classic analysis for you today. And a little while after publication on the YouTube channel, I'll put a link below the video to the article on my website, and you can see the text and get all the charts there. So if you don't like to learn or have your analysis delivered via video and you're like me and you'd rather read it, then just click on through, but just give me a little while to get that link up. Riot's moved lower since last analysis. That is exactly what I expected on the 19th of February. I have a widened and readjusted target zone for you now. It's 9.59 to 11.03. I am expecting downward movement for Riot now to end sooner rather than later. Elliott wave analysis first, followed by classic analysis. This is the entire price history of Riot, and I've analysed this movement from this high to this low as a counter trend movement. It subdivides very nicely as an Elliott wave double zigzag. If for the even larger picture Riot would be in an overall secular bull market, this would fit that idea, because this is a counter trend movement, which means the larger trend at a higher time frame would be upward. And then from this low to this high, this upward movement looks very much like an impulse and subdivides quite nicely as an impulse. I know the fourth wave is more brief than the second wave. For markets with really high volatility and commodity-like markets, and especially cryptocurrencies, they do have a really strong tendency to do that. It took me a little while to wrap my head around, but I've been analysing gold on a daily or weekly basis for over a decade now, and it has a really strong tendency to do that. Cryptocurrencies are even more extreme, and so I have no problem with seeing a fourth wave which is more brief than a second wave. I have a problem seeing it the other way around, but here this looks normal. From this high on down to this low, I'm seeing this movement again as a counter trend movement, again subdividing as a double zigzag, because that's how the subdivisions fit. This is on a semi-log scale. I have cycle 1 and cycle 2 incomplete. One of the core Elliott wave rules says 2 may not move beyond the start of 1, and so I do not expect a new low below 0.511. That's a long way away though. I don't expect it's going to get anywhere near that point. I think it's going to be over quite soon now. Let's take a look at the weekly chart, where this low, the start of cycle 1, is this point here. From this low to this high, we can see the subdivisions quite nicely of prime cycle wave 1. Just noting here, within primary wave 1, we do have a more time consuming fourth wave than the second wave, and the only circumstances under which that's reasonably acceptable is when the fourth wave is a triangle, because they do tend to be really time consuming structures, and this is how the subdivisions fit, and it meets all Elliott wave rules. So under those circumstances, that's reasonably acceptable. It's not as common though. 1, 2, 3, 4, 5, and 3 subdivides nicely as an impulse. 1, 2, 3, 4, 5. I haven't put the labels in there, it's just getting a bit cluttered. From this high on down to this low, I'm seeing cycle wave 2 as an incomplete double zigzag. The first zigzag in the double is labelled primary wave W, subdividing A, B, C as zigzag. The double is joined by a 3 in the opposite direction labelled X, which also subdivides as a zigzag. The second zigzag in the double is labelled primary wave Y. It's labelled A, B, C. It's a nearly complete zigzag. At the weekly chart level, I just have one target figure for you. At 9.59, primary Y would reach 0.618, the length of primary W. This trend channel is going to be very important. This is on a semi-log scale on my weekly chart. Draw the trend channel from the start of cycle wave 2 to this high here labelled primary X. Place a parallel copy on this low here labelled primary Y. This channel shows where intermediate A very nearly found support. It fell a little short, bounced up quite strongly just above the channel, and now I expect intermediate C may find support at this trend line, or in this instance we may see a little overshoot, because C waves tend to do that. And so if my target zone is wrong, price may move just a little bit below this to affect that overshoot. Let's take a look at the structure of cycle 2 at the daily chart level. This high, I think we're going to look at all of primary wave Y. This high here of primary X, is this point here. Now we're looking at the structure and all the little subdivisions within primary wave Y. Intermediate A, B, C, subdividing 5, 3, 5. Intermediate A looks like a pretty good 5-wave impulse. 1, 2, 3, 4, 5. Nice alternation here, an expanded flat for 2, brief little zigzag for 4. Intermediate B subdivides beautifully as a double zigzag. In last analysis, I had it labelled as a triangle. I was expecting sideways movement to complete that and then a downward breakout, but the triangle didn't work that way. We saw an upward breakout, which was relatively brief. And intermediate B ended up a double zigzag. W, X, Y. Each of these zigzags has a really nice fit. ABC, extended C wave for minor W. ABC, again an extended C wave and minor X. ABC, an extended C wave and minor Y. That's okay. A and C have a tendency to equality, but very obviously this movement and this movement both fit best as zigzags, 3-wave movements, and very obviously the C waves are extended. Sometimes A or C can be extended. They don't have to be equal in length. It's just the most common tendency. Most common doesn't mean that's always how it works though. Intermediate C is subdividing as a 5-wave impulse. 1, 2, 3, 4, 5. So now we get down to the daily chart level. We can see that this structure is in its terminal final 5th wave. Minor 5 of intermediate C of primary Y of cycle wave 2, a big bear market. Now at this daily chart level, I can widen my target calculation to a zone. I can get this at 2 degrees. It's a little bit wide, and I think I would favour the lower edge of this zone. At 9.59, primary Y would reach 0.618, the length of primary W, and at 11.03, intermediate C would reach 0.382, the length of intermediate wave A. I say that we may see the lower edge of this zone because of this channel. Remember how we drew that on the weekly chart? I've copied it over here to the daily chart and also this chart, so the channel fits the same. It has to be on a semi-log scale. C waves of the final movement in a correction have a tendency to overshoot channels, and so if this target is wrong, it may be just a little too high, we may see this channel overshot, or the lower edge of the target zone may be more correct. If we see a little overshoot of this channel, I wouldn't expect to see a big overshoot. If we do see an overshoot, I'll expect it to be small. If that happens, look out for a quick reversal for Riot, and the next movement for this market is a 3rd wave up at cycle degree. Let's take a look at classic analysis. How much support or lack thereof is there for that rather imminently bullish wave count for Riot? Riot's been in a bear market for over a year now, and that's a normal duration for a cycle degree wave, 1 to several years. So I think my degree of labelling for my Elliott wave count should be about right. In my last analysis, support at 20 had been broken, and I said to expect more downward movement to next support. That's what's happening. Next support's a fair way away though. Well, there's weaker support along the way down, but there's a pretty strong support about 5. I don't expect it's going to get that low though. Volume is now pushing price lower in the last completed week. That's bearish. It doesn't mean that it has to keep going lower though, because sometimes downward movement ends on strong volume, as it did on this candlestick here. This is the last candlestick of this downward movement, and it had strongest volume, and then we saw quite a strong bounce up from there. So just because volume is increasing doesn't mean it has to go lower. But also this weekly candlestick has a close really near the lows. There's a tiny little bit of an upper wick, but there's pretty much no lower wick. And so this looks like a pretty bearish close. I'd expect more downward movement from this one next week. On balance, volume is at weak support, but this trend line has only the minimum required 2 anchor points that you need to draw a line, so it's got really weak technical significance. It may not be strong enough to stop price falling, and if on balance volume does break below this next week and giving us a bearish signal, that signal would be very weak. RSI neutral, it's getting closer to oversold though. If it reaches oversold, it doesn't tend to stay there for very long, so I would expect it to assist or to indicate that a fallen price is almost at the end or at the end. ADX is too low, it's below 15, it's too low to indicate a trend, If it reached 15, that would be a very bearish signal, but that limit of 15 is to eliminate some too early false signals. So it's too early to tell that for ADX to be giving us a strong bearish signal yet. Stochastics is just beginning to enter oversold, but pretty obviously it can reach more deeply oversold and remain there, while price continues a considerable distance before we see a bounce. And ATR declining as price falls. When we look at the daily chart level though, we're getting some weak bullish signs. Price is moving lower. RSI is now oversold. On balance, volume is moving lower, but it's not making new lows with price. So there's some weakness in terms of volume for this downward movement. Volume for the short term is now pushing price lower, so for the short term I would expect more downward movement, but this bullish divergence between price and on balance volume tells us to expect we may see an end to downward movement sooner rather than later. And RSI at the daily chart level dipping into oversold now tells us to expect an end to downward movement sooner rather than later. It can remain there for a little while price moves a further distance. So I'd look out for downward movement to end in a little while, sooner rather than later, but not quite yet. A little bit too much bearishness for the very short term. This last candlestick here, a close at or near lows and a bit of a bearish upper wick. So Monday or the next trading session, I would expect another red candlestick from Riot is quite likely. ADX at the daily chart indicates a downward trend, which is quite a long way yet from being extreme. We've been over RSI, and stochastics oversold can remain there for a lot longer before we see downward movement end. And ATR tends to decline as price falls for this market in its entire price history. So that's all from me with an update for Riot for you. I will be doing another update tomorrow morning. I'm going to be looking at an equity for a member who's asked it. I'll be looking at Alibaba and doing a full video for that. Thank you so much for watching. Thank you so much for all of your support.